Go. Okay, what's going on, guys? So we are past the inauguration of Donald Trump. We now have a new president in office, right? We have FOMC end of month, and this is going to be the first FOMC meeting with Trump in office. We have expiration on Wednesday of this week, and we have following that, we have jobs data on Thursday, initial jobless claims. And it looks like right now on futures, we are actually getting a gap up, which would establish the NWOG week, right? So we talk about these all the time. Basically, we use the NWOG as a directional read. And the first and foremost thing that I want to talk about with the market is that we are going to get in a peak euphoria setting, I think, where a lot of people are front running some sort of major blow off top with Donald Trump now being in office, right? But they have been front running the market for a very long time, and obviously everything was totally priced in as we made these new highs into the past the election. We knew Donald Trump was obviously going to be inaugurated, so the inauguration itself, guys, has absolutely no catalyst. For the general market, right? This is all priced in. The date has been priced in for a very long time, and we're actually heading into a window of weakness. This 2 week window after OPEX, OPEX being this candle for the December chain right over here, and then we just had a January OPEX, which was last week, right? So we have a 2 week window of opportunity here for a window of weakness. Now, does that necessarily mean that a window of weakness means, okay, yeah, we push higher, then we fall, then we drop, then we put in a lower high, and we pull all the way down into the fill of the gap down here at 492.21? No, not necessarily. However, you have to be very cautious with your long side trades, right? My long side trades are more and less going to be sectors outside of tech, and then tech is likely just going to be the focus of mine where I'm looking short, right? Amazon would be one of those names that I could trade long side, but most of everything else is going to be a short side trade. Most importantly is, I think, in my opinion, going to be NVIDIA. This is a very clean distribution schematic where we've had it starting all the way back here from the June highs, right? We created a lot of internal structure after we filled the bottom bull gap, which led to a major change of hands in the general tech market, right? And then we just led to a slight grind higher, and then we obviously could not get continuation above where our previous high was into our new highs. We actually got distributive looking candles through our earnings reports, followed by pullbacks. We started to build liquidity on consecutive tests towards 132 down into 128, and then it seems like they undercut this level at 132, sent it one more time higher. This would be your UT in a distribution. This would be your UTAD. Following a UTAD, what we always look for is an LPSY, right? And if you guys don't understand any of that, you need to read the Wyckoff book, and you're not putting in enough work. But that would be the LPSY on its way here for NVIDIA, right? Now we just basically need to see the bid fizzle out in just the overall market, and most importantly, the NASDAQ. And the reasoning why I really like all of this, if we go back to our calendar, we have an unfilled election gap, okay? We filled that on the SPX. However, we did not fill that over here on the NASDAQ, right? And there's really not been any sort of impressive strength on higher time frame structure within most of your mega cap tech, right? I think what happened, guys, was we got the fill of the election gap with the SPX just because of the sole reason that we had banks looking really, really, really weak for a very long duration of time here. As you guys can see, the bank sector was actually one that was falling one of the most, right? And then you had some other relatively weak sectors. That led into almost the fill at the bottom down here at 46.73. And then we had the earnings reports come out for all of the bank names, and obviously they marked up off of those, right? Which is also helping the SPX move its way higher, right? And then we had some other rotations. If you guys look at industrials, if you guys look at a lot of these other sectors, you're going to be able to see really nice strong weekly prints here on a lot of these things, right? You go over to mags, however, And you kind of have all of these volume anomalies everywhere throughout the chart on the weekly. And we're not getting the strongest looking structure. You go over to NVDS, which is the inverse of NVIDIA. And basically what we have here, guys, is a bottoming formation where now we're essentially just looking for one sort of higher low. That higher low would likely come off of just a claim and a hold of like $25, I would say, would be a really nice gauge in terms of looking at this thing for momentum on the old support, right? That was obviously lost, and now we can't really claim through it, but we have crazy volume from the lows. We're getting this high tight flag on like your hourly / daily, and basically what I'm looking for is just a pivot above that range, obviously a hold of that range, and maybe a fill of the gap all the way up to 29. That being the December 20th levels. If you go over to the December 20th levels from the close of that candle on NVDS at the top of the gap, December 20th levels were all the way down here. We're all the way down here, okay? And then we obviously, what we have with that, guys, is now obviously a path of least resistance from the downside because we've tested this 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 different trading days we're testing off of this support, right? So basically what I would be looking for here, guys, is just some sort of lower high. It could come off of this level at 140.76. If you're pulling fibs from swing high to swing low, it's essentially just your 0.50 here off of 141.32, and that extends all the way up into the 618 at 144.11. But obviously, if we were to push all the way up into that breakaway gap that was capitulated through, then start testing into this imbalance candle on the hourly chart, then maybe fail, find a lower high. We could take it all the way down to the bottom of the range, and then if we take it down to the bottom of the range and it starts cracking beneath, and then we get another lower high, this could be a really nice opportunity for a swing trade all the way down into the gap fill at 115. I'm actually getting almost like this AMD vibes from this, but we need to see this pop that's going to push us higher, whether it's into this level or all the way up here. We need to see that being relatively weak, and then we need to see it kind of fizzle out, and obviously sellers take control of the name at that general area, right? So that's NVIDIA. Obviously, the dispersion that I talked about on the little list that I made here, that would be the NVIDIA OPSY, last point of supply. We do have the unfilled election gap on QQQ, and what we have is tech weakness, right? So those are two very notable things that we have, while there's obviously dispersion taking place into other sectors, right? So you have dispersion into your industrials. You have obviously dispersion as of lately into your energy, right? So there's energy, there's industrials, there's obviously now financials. There's so many of these sectors where, there's not going to be a super valid short side trade in terms of looking at breadth recorrection happening on a smaller scale into all of these sectors, which obviously benefit the SPX, right? So I'm probably going to be shorting just NVIDIA or just tech, meaning QQQ. QQQ obviously being my short side vehicle. We just talked about the sectors. Window of weakness, that's the 2-week window after OPEX. Obviously, we have a Bitcoin sweep of the highs. If we go over into Bitcoin and its chart right now on the daily, this is not really the cleanest look in my opinion, and we are actually failing internal structure of resistance being failed to base as now as support. Obviously, if this stays beneath this level and then obviously cracks these 2 daily lows and it starts going for more towards the bottom of the range now, essentially is what I have in mind with Bitcoin. We obviously had a big time seller stepping in on Bitcoin once we saw this gross capitulation and some of the biggest hourly volume that we've had on Bitcoin relative to the rest of this range here in forever, right? And it was actually a sell bar, right? So this is a very important area on Bitcoin to obviously hold and close off the daily candle strong. And if that can't happen, this chart obviously needs a little bit more time, and it obviously doesn't really look too good. Obviously, crypto moves weird, right? So there's going to be opportunity on both directions, but it could still see some upside. But it's just funny how it's getting a sweep of the all the highs, right? And then it's obviously creeping back beneath those lows and now failing. So obviously, with that being something, Trump also actually talked about energy, right? And we still have Oxy. I've been talking about this chart for literally like price since all the way down here. So however long that has been. Um, Actually, over here in the beginning of December is when I was really talking about this. And we have 4 inside bars with a gap fill to the upside. And Trump actually just talked about energy. So that's what I've been waiting on. I've been saying this thing could obviously go and fill that 54 gap with one simple catalyst, that one being Trump's words on our energy and what we're doing with our energy, how we're going to mass produce and whatnot. It's going to be a positive impact on these on a lot of these names, right? We have QCOM. I want to talk about QCOM just because it's been one of those really quiet charts on our weekly time frame, and it's really just consolidating off of where we had like a previous breakout on the weekly, right? It was a breakout and a retest on our weekly level right here off of this resistance, which obviously tightened up, broke through, fell back, got a retest, and then got a move higher. Now, obviously, the distribution started to carry out once we got over this high at 193.35. Then they started to put in these really ugly tops, followed by lower highs within this bear gap, and then it started to really fall its way lower, all the way back down into where we broke out from. It made a new low. That new low from the breakout retest area, which is right here, was then obviously put in on August 5th, followed by so much consolidation on our weekly chart here, guys. This is a ton of consolidation on the daily and the weekly. We have a trend line from the all-time high to this lower high to then obviously this rejection point, which broke through. And now we're pressing up very tightly against a resistance that's been here for quite some time. And it was also a previous support. And if you guys know anything about these rectangular redistribution or accumulation ranges, you have to pull the fib from the low to the high, start looking at equilibrium of the range, right? We're actually right off of equilibrium, which ties into the 165 psych. So if 165, 166 kind of gets a lot of control on higher time frames, this thing is, I think, is really primed for the upside. Could it obviously pull lower and then pull back higher and do something that looks like this, right? And then sellers really fizzle out, then it goes, and then it goes for upper extremes. Yes, it could, but we also do have earnings on January 29th, right? So do they want to run it up into the earnings, or do they want to keep it really quiet and really coil it up and absorb all the remaining supply out of this area? And then obviously it would be more of a sleeper earnings play. I do think this could be an earnings run-up trade. I don't necessarily know if we mark up on earnings, but it could be something similar to MU, where everyone on MU was looking long, right? And they were looking long actually into the report. And then that obviously was a big fat failure through the report, but it was a nice little pop that we had to fill the gap before pushing our way lower from the report, right? And sometimes whenever they want to distribute, they'll pop it higher, then drop it, especially if it's a very crowded name. I expect this thing to obviously get very crowded if we start breaking out and putting in these 3-4% days on the underlying that have a nice increase in volume and a really healthy candle spread to it. That's why I kind of want to trade like a little earnings run up on this, or just not trade it at all. I don't really want to speculate too hard with a name like this. We also have some other dispersion examples from NVIDIA to other names like LRCX, which is looking for a really nice crack in lower high structure from the higher time frame perspective, right? We had lower high, we had lower high, we had lower high, right? And then we just started building a flat top here. Now we're finally controlling the flat top, and then we obviously have gaps all the way up into 92. And the context of this is also very important and very clean and very clear. The context here is a very beautiful weekly candle closure, obviously, as you guys can see displayed on the weekly chart. This is one of the strongest weekly candles that we've had in a very long time, of plus 7.57% on the underlying. And we actually got a successful close above this weekly level here at 79.60, or I guess you could say $80 psych. We have a gap all the way up into 92, like I said, and this is a 1, a 2, a 3, a 4 lower low accumulation. Now we're putting in higher lows of 1, 2, and third higher low, and this is all off of context to a very, very critical area on the chart, right? And we've been seeing how this has been really consolidating and building up a tight range, while we have the upper ranges building up tight ranges on NVIDIA, and the bottom range is building up tight tight ranges on the other semiconductor names, right? So we have a very, very clear differential in terms of just looking at a directional read and just pure risk to reward, right? Is NVIDIA necessarily going to be the short of all shorts? Is it going to be that name that is driving price action to the downside? It doesn't necessarily have to be, right? It could take one catalyst to push this thing back into a spot where things don't look so bad after all, right? But I will have to say, your other semiconductor names, they won't sell as hard with NVIDIA, I think, if they do sell. And if they don't sell, and then NVIDIA starts recorrecting itself, we want to obviously look for those names that are being rotated to whenever NVIDIA has the rebounds to it, right? And NVIDIA is not going to break and crack structure and break down with ease. It's not just going to go up here in a day, then it's going to fall and gap down, then it's going to consolidate for a day, then it's going to push to the resistance in one day, then it's going to get one slight bounce the next day, then it's going to crack through the next day, and then it's going to retest the next day, and then it's going to capitulate another 5% the next day. It's not going to happen in a week and a half, guys. No distribution schematic ever happens in a week and a half, especially whenever we're looking for an LPSY and for that distribution to be fully finalized into obviously a markdown beneath these ranges right here, right? It's just not going to happen that way, right? We could catch a couple shorts on this one and then obviously put stops around the break even and maybe scale some out and then see if we could hit like a much bigger trade. But yet again, I still would like to be taking profits day in and day out on most of my trades just because obviously we don't know what's exactly going to happen, right? The Fed is in a really big corner. We obviously have some new ideas of things that need to be changed with our monetary policy as a whole just being really destroyed. Not to get political, but Biden doing an absolutely horrible job with the whole money market and everything that's been going on with propping the markets and pumping unneeded liquidity into the markets in an economic shit show. And with inflow into financial markets comes outflow, right? And that outflow could be double as worse, right? We could see a major decline in the equity markets based off of everything that has been artificially propped throughout, not necessarily artificially, but just in an unhealthy manner has been the way that things have been kind of staying together. So that would be all of the tech that I've been talking about. We have a very important daily/weekly candle closure here for Tesla. We're obviously at a big time zone on the weekly chart with Tesla, guys. It's a huge resistance turning into potentially a support, right? Does that mean that it's going to obviously find an easy launch pad and then we obviously continue our way higher all the way up into like, new highs? I don't necessarily know, right? But what we ever did notice would be if you're ever going to notice something with this thing, it had a big time resistance here on the daily chart and then obviously popped up into discount on this wick and then filled the gap and then it pressed lower just beneath this daily level here at 427. So very, very important candle here. And I feel like if we get slippage beneath, that could also be a telling sign with your overall market. BA is going to be a name that I also really like moving forward. Obviously, we have a very clean higher low look on this weekly chart. I really like how this weekly chart is setting up. So this is just one of those industrial names that could make total sense in terms of rotation towards this one. We have an unfilled gap all the way up into like nearly 200. We have another one all the way up into 250. So the risk reward here is absolutely insane in my opinion. I think this thing has potential for much, much, much further upside. I'm not necessarily saying we're reaching into the 250. Do I think we could reach into this level up here into the 200 area? I totally do. So with that being said, that's BA. If you guys go to the daily chart, all this really is a really nice high tight flag on the daily, and basically just a retest of this gap that was being held as now a potential support. And this was the bottom of the gap, and then it turned into 1, 2, 3, 4, 5 days of resistance following the break and the loss of the bottom of that gap, which was the gap down from like some sort of news, and it had some decent volume behind it. And then the volume has been relatively dry throughout this whole entire channel, right? So I'm just looking for one simple pullback, right? If you guys look at your daily EMAs, they were actually reclaimed on Friday's session, right? And if you guys go to the weekly, all that is on the weekly is an EMA crossback type of setup that people all like to talk about, right? So it's just one big, strong, constructive higher low on the weekly chart. Not anything too crazy there. Crazy volume from the lows, which kind of sparked the rotation. So yeah, we'll see with that one. D-Dog, this is one of those ones that is kind of tying in nicely with Snow. I kind of want to see this one get above 141 or just 140 psych or just Friday's high. It's just one big, massive retest as well as a gap fill, right? So we have a huge retest here from this massive weekly breakout level, right? And if you go into the daily chart, it was just one big time gap that broke us through. Actually, two consecutive gap ups followed by a high tight flag and then following 2-3 days of continuation. So there was a major extension within this name here, but we did get a pretty low volume pullback starting since the holidays, which I don't hold a lot of relevancy to that. But we did get a decent little volume increase here, actually on the gap fill itself. And if you guys go into the hourly chart, a lot of that volume was technically towards the lows of the day, right? It's on this candle, but if you guys go into the 5, you're going to be able to see how it actually was through the capitulation, but then we had pretty heavy volume everywhere else throughout that. At low a day almost, we had some pretty nice volume with like a very tight candle spread right off the gap fill. And then what it did was it consolidated, and then it finally got its gap up. Now we're basically just looking for this thing to remain controlled on top of that gap and maybe for Snow to find a little bit of momentum off of its peg. If you guys go over to Snow, this is getting really aggressive markups from the previous earnings report, right? And it's never had its true continuation just yet. So if this one could start going as well, that would be fantastic. We do have a big time level over here with Snow that I wanted to point out. And we're basically breaking through that on the daily chart as of lately. And that was also a previous resistance that we just actually broke through today and had a gap up and a closure above on. So if we could control that 170 area to like 168.68, that would be really nice for then obviously a continuation, which we can also take a look at its little brother, D-Dog. So yeah, I like D-Dog. BE has been a chart that I only own commons with. I did previously buy some calls once I found a decent little buyer down here from the bottom ends of the range. Really, really nice continuation back up to 26. I still own my commons, but that's just up for interpretation as we move forward. There's not any clean area of execution there. If the market wants to transition a little bit risk off and maybe rotate into some consumers, I think MO is going to be my name. This name actually reminds me a little bit of DE. We had a massive break through here on their earnings report, right, with a gap left behind and a massive intraday continuation candle, which then led into new highs above this resistance, right? And it started pushing all the way up here towards 58 resistance slash 57, right? So from 57 to 58, they were obviously taking profits on this move higher, rightfully so, because it's a big time move, right? But if you go into the daily chart, we pulled back all the way down, filled the gap, had 1, 2, 3, 4, 5. 5 days of basing action happening here, and now we're basically just looking for this to find some healthy consolidation and healthy rest. And I do have a target of 53.50 in mind for this one if consumers want to start moving. So yeah, that's a really nice one. Nike, just a side watch, just because we're at new lows. If those new lows get soaked up, it's obviously going to result in a continued accumulation. And this is where the risk to reward could get absolutely insane from. One, because we already had a mass amount of consolidation and really no true seller anywhere throughout this whole range. We had earnings, and then there was basically a neutral candle spread there in earnings. The volume really dried up throughout the holidays, and then it pulled us all the way lower into new lows beneath where we were previously building out our first initial sign of accumulation, right? So if we get a spring off of this level, this could be absolutely insane, right? And it would start looking like we're getting some sort of like internal base type of 1, 2, and 3 lower low accumulation, maybe one more one down here. And if maybe Nike could build out a schematic that looks something like this, right? Maybe one more low and then it starts going, that would be absolutely insane, right? But that's going to be a side watch for me, and it's not obviously ready yet. There's no sign yet. There's no clear signal. It's just more and less waiting for that middle phase of accumulation to kind of start doing the same thing over and over. SQ, we're obviously at a break of the creek area on SQ. If you guys go to the weekly chart, I can't ignore that crypto has been quite the volatile sector. And now basically what's happening here, guys, is we're getting one nice little pullback. And if we could get back above, if you guys go to the daily, if we could basically just control this area and preferably get above like 87. If you guys look at your EMAs on the daily chart, we're in a very critical area, in my opinion, on the daily chart for SQ. And I don't think this one has been trading really well at all. But if growth wants to wake up again, that's going to be a side watch for me as well. So none of these charts are ones that I'm going to be really focusing in on. Maybe a few, I don't know. I still think there's a little bit of room left in the tank for ZOM. This has been a major energy lagger. Do I know why? Not necessarily, but what we did was we took out these support areas, and then we just never got the displacement beneath that support. It was more and less just shaking people out underneath these double bottoms. Okay. We actually did retest the breakout. Okay, so this was our previous breakout area. We retested it, and we took out these lows, and then we got back above both, and now we're finally finding a little bit of momentum. Do I necessarily know where this is going to be a valid trade at? No, but could I get away with a decent looking trade somewhere on ZOM within here? I definitely could. We also have a very, very, very big time area on the XLE chart, and funny enough, it's talking about Trump. We're talking about Trump talking about oil and energy, and we're at one of the biggest levels ever, or the biggest level ever, on the sector fund, right? I mean, we're at a massive supply zone on the monthly chart, right? Huge, but it's been tested so many times, right? I mean, you're looking at a supply throughout all of this range. But we're building out the higher lows up into that area, right? Higher low, higher low, higher low, higher low. And it's all coiling up on the monthly right up into this like huge breakout level, right? And technically that breakout would be a valid candle closure over like 95 next month. So, or within 10 days. So we'll see how that monthly candle closure looks for the energy sector. However, we just know on the higher time frames, this is going to be a very shaky area. But if we can control it, we obviously know that the market has been pricing in a risk off rotation, which leads me to believe that the distribution is going to continue in the NASDAQ, right? Because obviously, with a rotation sparking into the end of the year, into the inauguration, with obviously choppy looks in a lot of the tech names or very distributive looks in the tech names, so you're getting that bid in energy and maybe into some of your other sector recorrection, and breadth is recorrecting under the hood while you're getting liquidation in tech. That's going to obviously result in further rotation into energy, meaning we are rotating money out of tech into energy and more into the broader market correction as a whole, right? Where a lot of the sectors, sector by sector, are more healthy than just your like tech, right? Because tech has been the whole attention grabber in terms of the equity markets and everything. All of the inflow is kind of inflow into your tech. So with aggressive inflow that is unneeded comes outflow in the opposite direction, maybe twice as hard. Karma is a bitch, just like it is in anything. So yeah, the Fed, Biden had his literal fucking neck, his boot right on the Fed's neck, stepping on their neck, saying, "Prop the market for me, pump money to the market while I fork over 10 billion to Ukraine." I'm gonna put all of the Ukraine soldiers in some Lamborghini Aventadors while Americans are eating Ritz crackers with Lunchables salami and cheese, right? So obviously that's like not a good thing. Um, it's not a good thing at all. So what that means is that whenever you're doing such unneeded things in a relatively shit economy, especially pumping money into the markets when it's really not needed and it's more of an ego thing than it is really. I hate to say it, and it's really a joke, but it's true. And it's more of a competition thing, in my opinion, rather than it is we should be pumping money into the markets, right? And we pumped retarded money into the markets. So, yeah, that could obviously result in Trump laying the hammer and just saying, dude, we're going to have to really, really, really look up our wounds here and just take the beating for a little bit of time, right? So, with that being said, guys, we have Data Thursday. We have an NWOG potential for the gap up. We have a Bitcoin sweep of the highs, and we also have NVIDIA LPSY. The gap up this week should bring us into discount, right? So we have a gap up. It's going to bring us into discount, okay? And then that means we have an NWOG beneath us, okay? We have the Data Thursday. So jobs data Thursday is very important. Vixpiration Wednesday. I feel like this is what can kind of catalyze the downside. So with that being in mind, I think Vixpiration can obviously sell us, right? So I would be looking for a fade maybe into the Data Thursday. If you guys go over into Qs, we have this wick on the daily chart. That is a phantom print. That is something in terms of order flow and orders being placed there. There's no low there, and that's actually the close of the gap, right? We also had a dark pool bidder there on the SPY at 592, right? Which is also the close of the gap as well. So I do think with where we are in the SPX, I think we could obviously get into some peak euphoria mode above this high, or we could fill the gap and then we start failing, and then data facilitates us all the way back lower into the from the Tuesday to the Wednesday move higher, that Tuesday to Wednesday gap, and then we could sweep that or close it. That would be probably in time in terms of looking at the distribution schematic kind of carrying out, and then we can maybe get a big, large footprint from a buyer on FOMC, or FOMC can maybe pop at first, put in an LPSY, and then drop us. And then we would obviously look for FOMC and its volume and its impact to then obviously put in the LPSY from the bottom of the range. If we could fill the gap up here that was generated through CPI, if the FOMC candle around that can bring us the LPSY, right? Which would be first move pop, and then after into the afternoon, we kind of get a bloody afternoon. That would be a very beautiful looking LPSY candle for the indexes, especially SPY. And then obviously with the LPSY through FOMC, it would probably result in a path of least resistance for the downside, where we would start failing the gap. And then that we would obviously use the NASDAQ unfilled election gap as our gauge, as well as this gap down here at 471.32. And it's ultimately all dependent on how weak tech really wants to get, right? We don't necessarily know yet. So that's going to be all of my preparation here for the market moving forward. I don't think there's anything else I really need to be looking at. Obviously, there could be some trades in between that are very short term and just trading with relative strength or the weakness. Obviously, with the long side trade ideas I have in the tech market or mags, it would be more of like the Amazon side of things or something like that. But we also have some earnings coming up, and maybe we need earnings to also kind of give us a directional read for what's going to happen in the bigger perspective of the market, because we have some really ugly charts, but we also have a very important time where the Fed needs to make a very critical decision. We're also getting where Trump is going to be talking about tariffs. It's going to be making a large impact on probably a lot of the industrials and consumers. So there is going to be a ton of volatility, right? And we kind of just have to trade with the names that have been kind of getting the dispersion under the hood. And we've known what those names have been. We do. In terms of semiconductors, Nike, we had some consumer discretionary looks elsewhere. We had a lot of different names that have been looking pretty damn good, right? We have McDonald's here as well that I might be looking at. As far as like if some of the consumers want to move, it's kind of similar on a 2-day candle structure. It's actually somewhat similar to what's wrong with my trading view, man. This is like not okay. It's kind of like a similar 2-day structure here with MO. But I would like McDonald's to just basically get above this level right here, okay, which is 283.71. That would kind of resemble that we have a little bit of momentum off the gap, and I kind of want to get this over 283.71 after a fill of the gap. Futures just went red to green, green to red because Trump just mentioned tariffs. Oh my goodness, that's so funny. Wow. That's crazy. Now Bitcoin's bleeding as well. Yeah, so this is what I mean, guys. As I'm making this scan, everything is already priced in. So whenever everyone's anticipating a crazy move, guys, we've already been in a distribution. They don't have the inventory that they need, in my opinion, for a blow off top. So do I think pullbacks can come that are constructive, that can fill gaps beneath us before a rally higher? Yes. Or could I see also just dispersion under the hood happening? Totally. So you guys got to really, really, really pay attention to this market, because I don't think any of us has ever experienced anything like this. And you have to just trust the charts. I feel like so many people get so tied into other things that make absolutely no sense. Like they try to tie in like a fundamental thesis of what Trump's saying. Meanwhile, big money prices these things in from a long time ago. So, yeah. All right. Well, I'll see you guys later. Obviously, this whole entire scan could be ruined through anything Trump says tonight, so I have no idea what's going to happen. I have a little bit of NVIDIA puts just to have some. I have a little bit of leftover Apple, and that's basically it. I have a little bit of BA long, and I don't have any true meaningful positioning really anywhere else. So that's all obviously subject to change, and we'll see what happens. But I'll see you guys later.